G'day, money miners. Travis told me the biggest undeveloped gold deal in history has happened today.
Yeah, I can qualify that statement, I think. But this is a pretty momentous day. It's a big day for a lot of DeGray shareholders.
Yeah, God, bloody good for the industry. I'm just thinking pits, underground, workers, just jet skis and Hiluxes coming the way of a lot of miners. I love it. Love it. Bloody, I think today is focused on Northern Star acquiring DeGray. Holy snap and duck shit. We go.
Huge.
Love it, JD. Did you get a bit of a bloody mongrel over this, mate?
Mate, I know you're pumped about the underground aspect, but I think this is much more an open pit sort of one.
Open pits, underground, fucking everything.
It's all happening, mate. There's heaps to chat about.
So much. It feels enormous, and I'm sure we're going to go into it all, Matty. I'm keen to cover it all. I know we've all been doing our own thinking on this, and there's the operational parts, there's the financial parts, there's what it means for DeGray, for Gold Road, for Northern Star, all of that stuff, and the other players too. We'll get to it all. I just wanted to tell the money miners who are tuning in. Tomorrow, 5 p.m, Brewdog, we're having our Money of Mine Christmas drinks. Come along. Just come along.
Come get pissed.
Brewdog, West Perth, pop along, 5 p.m.
Pretty simple.
I got me bloody daughter's Christmas concert at Wednesday, 9 a.m, so I'm not getting messed up, but I will be there till 10 or so. I have commitments. Not like last year, which was 5 a.m. Righto, let's get into it. So, mate, this is big time M&A just before Chrissy. This is huge. Ali GC's had a win on the ETF. Ding, ding, ding for DeGray, for Ali GC. Go, mate. That ETF's just, mate.
Hold on, Ali.
Oh, mate, there's going to be bloody additions and redemptions. It's flying. The liquidity's off its charts. Mate, right, off the cuff. First thoughts. DeGray acquiring, Northern Star acquiring DeGray for about $5 billion.
First thoughts were shit. That's a pretty big price tag, and it's a bit of pro-cyclical M&A. But we'll get into that, I'm sure. Trav, what were your first thoughts, mate?
I was. It's just sometimes you wake up, you check the announcements, and you're like, what the fuck? It was a well kept secret, to be honest. Like I didn't see it coming. Like I knew that Northern Star had some latent interest. I thought it would come later, but it's just such a big price tag. I kind of always underestimated the probability of it coming through, but it is, and it's here, and it's a big deal.
Matty, your thoughts, mate?
First one was like, right, they're dressing themselves up to have these big, massive, bloody long life assets, which could potentially mean they'll flog off some of the smaller ones now and still reach their 2 million ounces, and could be a target later in the future for a global mega merger. That was the first thoughts. Literally.
You're always thinking the next
moment
step.
just came to you. I like it, mate. I like it. And I'm sure we'll talk more about that sort of Karasu Dam and the other potential spin outs that we might see down the road near the end of the chat today.
I'll just rip it out early. MMS better get the contract for this. 10 million tonne of ore is going to be hauled by MMS. This is transformational for Northern Star, but I want it to be transformational for MMS as well. Mineral Mining Services better be on the blower right now. They better be in the data room. They better get this contract, or I'm going to spit me chips.
10 million tonnes of ore.
Yeah, and the waste. Mate, they're the team for the job.
There's a lot of material to move. You're going to need
Northern
MMS.
Star do the right thing and get MMS this contract. They can mix it with the big boys. Don't worry about that. Okay, go over the deal.
All right, let's run over the highlights for anyone who didn't sort of read it just quickly. Northern Star will issue 0.119 new shares for each DeGray share. So it's an all-scrip deal. DeGray shareholders will get just under 20% of the combined group. So Northern Star are implying on their previous close price a $2.08 DeGray share price. That was a 44% premium to the 30-day VWAP. I think it was about a 37% premium to DeGray's last close. So $5 billion. That's the headline here.
I said 5.5 before. Sorry about that.
Five, mates, and just sit on that. $5 billion, Aussie $5 billion for an undeveloped gold project. Never happened in my career. For context, like the purchase price here, Aussie $5 billion. that's about the same total valuation as, both BHP and Lundin collectively acquiring Filo, long life copper asset in Argentina there. It's about 2.5 times the price paid for 100% of the super pit by, Northern Star's stake and Saracen stake collectively about 5 years ago. It's 1.4 billion more than Anglo Gold Ashanti have agreed to stump up for Centamin, which is an existing producer of nearly 500,000 ounces per annum, and that's in Egypt, of course. So, there's context to that. But I'm pretty certain that this is the highest price tag ever paid for a development asset in the gold and precious metals space ever. The North Americans will point to Redback Mining back in 2010, acquired by Kinross for 7.5 billion Canadian dollars, but there was some producing assets part of the portfolio at the time too. So I think you got to kind of qualify it as such. I honestly think this is the second biggest development asset in the precious space. You'd have to go all the way back to 2010 when Andean was acquired by Goldcorp for Aussie 3.6 billion. This is massive. This is huge. It's a huge deal.
What do you think? How do you look at it? But like when it is, as you said, a bit of pro-cyclical M&A, but considering the value of their scrip at the moment.
Well, that's the big caveat to doing pro-cyclical M&A. You're not doing a Rio Alcan loading up with debt in 2007 to do a deal. You're using your paper, so you're still diluting, but it's not the same that could potentially get you in a huge amount of debt trouble a couple of years down the track. Say the cycle kind of turns and gold pulls off a bit. You got to look at it a bit differently. And to add into that as well, De Grey did close the September quarter with 830-ish million in cash. So need to slide that in. That'll come into Northern Star's pro forma cash. So yeah, I mean, it's been an interesting year, right? Like gold is up 30 some percent over the year in Aussie dollar terms, from 3,000 to over $4,000. And people just get more excited about it, Matty. And then you look at the studies, you look at the DFS, you look at the optimized pitch shells and the prices you did all of that at, and it's a positive. You can just say, hey, that was done at such a cheaper price. That's what you kind of do in an environment when the gold price is going up. But of course, we've spoken many times in the past about how you'd rather be doing M&A looking at the cost curve and saying, hey, the price is eating right into that cost curve and heaps of the mines are unprofitable and you're getting a cheaper price. But that's not to say they're not getting a bad deal here.
It's directly proportional, saying that they're going to produce 2.5 million ounces by FY29, and De Grey is going to hold 20% and they're going to produce 500,000. So they're effectively, the ownership is directly proportional to their output of what they're predicting. Bang on.
Yeah, I mean, you got to look at it on a fully funded basis too, because there's still the capex piece is largely unfunded at this stage too. So
oh shit, yeah. The 800 million helps.
Yeah.
So it's might come in handy.
Yeah, absolutely. So, after talking about the sort of the logistics of the kind of deal, I think we should talk about Gold Road, what their kind of role is, and the register kind of more broadly at De Grey in the context of getting this deal done, getting it over the line. So no secret, Gold Road has a huge stake, 17.3% of De Grey. They've done, phenomenally well out of that investment since they picked it up some few years ago. They're up to their 52-week highs. I think I saw they're up over 10% today. So they're having a great time. And then you've got other instos with 58% of the companies. So De Grey is pretty tightly held. Top 50 shareholders hold about 75% of the business there. And of course, you have all sorts of kind of instos. You've got your passive money as well as a few active managers holding that. But one of the first positions we and a bunch of other analysts looked at and asked on the call is what's Gold Road going to do? Are they going to vote in favor? Because that is the one potential stumbling block to getting a kind of deal done. And I'll just play a very brief snippet from the call today. Here's from the Managing Director of Northern Star, Stu Tonkin.
And then, sorry, I didn't catch the answer to the Gold Road question about their support.
They're aware, they've been known, but we can't speak on behalf of Gold Road. That will be for them to speak.
Telling, right? Yeah, I mean, given Gold Road owns 70.3% of De Grey, it's such a meaningful stake that there's no way this deal got announced without a conversation being had with Gold Road.
You'd be mad not to have your arm with them.
Yeah, you're asking for their intention statement. You're asking for them to write support that subject to no superior proposal, intend to vote in favour of the deal. So they will click. I'd find it hard to believe that conversation wasn't had, but it's telling that there's no wording to that effect. No mention of Gold Road in any of the docs revealed today. So for whatever reason, Gold Road has not provided their voting intention statement. They're probably just retaining their own optionality. But it's the absence of that in the docs that were released, which was telling. 17.3%. It is an interesting number. I actually think, and normally it's a scheme, right? So you need 75% of the shareholding by vote to actually block a deal. I don't think it would be enough to block this deal, even if they voted against it. I think it's like such a big and liquid stock. You've got a lot of passive money there. You're going to get proxy advisors just recommend shareholders and funds and institutions vote in favour. So that'll just accepts into it, and then you got M&A ARB funds will come in the mix, and there's a big incentive to. So I don't actually see the Gold Road stake as an impediment to getting the deal done, although their absence from providing their support is notable. Yeah.
Unless they block out their position before the actual vote to all the ARB funds and everyone bloody else, they could start bloody selling it now if they wanted.
They could do that. I think they're better to just hold on and retain optionality. If someone else, like if it became competitive, then that's a strategic stake that an interloper could want, right? Even though Gold Road themselves can't be competitive in this situation, not on a standalone basis. But yeah, I think you have better value just by kind of holding out and seeing what happens if there's an interloper.
Yeah.
Do Gold Road need the money now?
Don't think so. No. I mean, but it's fascinating, right? 17.3% of $5 billion is nearly $1 billion. Gold Road's total market cap is $2.2 billion. So
I think they put 350 mil into this. I think
yeah,
I was told.
I'm more thinking about the see-through value on what the value of their Gruyere stake is. It's Gold Road's a sizable producer, and Gruyere's not being valued much by the market at the moment, which is a pretty interesting phenomenon when all the other gold producers are trading at big premiums.
Yeah.
Yeah, I think you nailed it. It's that word that investment bankers and management team loves. It's just optionality. Why go into it now? Why put your name to it? You've given a little bit away. I mean, just hold on, see what sort of happens. Yeah,
I don't know. I like it's subject to a superior proposal. Like I don't think there's too much harm in putting your name to that early. It's an interesting. Maybe there's like a desire to agitate, but I don't think they can. Keep in mind, remember when Gina brought up like 20% of Azura on market, and then all of a sudden, in order to get a deal over the line, it had to be a joint venture with SQM that came in, and it was a bidding consortium. Maybe they've got hopes of having another non-controlling interest in the ultimate joint venture here by agitating to some extent, but I just don't think it's going to happen to them this time.
Yeah, it's a long shot, but maybe they'll just have their fingers crossed and see what happens. All right, let's kind of talk about how Hemi fits into the broader Northern Star. So this is a big bite, like we've said, and it's not exactly a carbon copy of what Northern Star have previously done in terms of M&A. They're buying a huge undeveloped project here that's not been their MO, and they were asked a question about this, but Stu Tonkin was very keen to push back on that. I don't think he liked the question too much. So here's his response to Northern Star, in quotation marks, not being a mine builder.
Have you thought about development risks?
Yeah, okay. So we understand them. We've operated in this state for well over a decade, and we've developed lots of things from approvals, greenfields, mining leases, all the way through to building plants to building underground mines. We're doing it every day of the week. We've got 7,000 employees across our portfolio, and we're obviously the largest gold operator in the country. We have good depth of building stuff. It's what we do. So I wouldn't dismiss that. We're saying our history is M&A. We got into suburbs and jurisdictions at a level, renovated assets whilst we were operating them, and expanded them and brought them into a new life through extending life and operating those assets. So it isn't different to all of the skills that sit in it.
There you go.
Yeah, that'd piss me off too. My God, they're adding 13 million tonne to KCGM mill. They're bloody been starting pits for years, cutting portals for years. Like, just because they haven't developed a pure greenfields site. There've been small scale greenfields they've developed on existing leases, like satellite projects. So they've been doing it for bloody years.
I think it's a logical evolution, this kind of deal. They're a $20 billion miner now. You know, there's been obviously a number of secondhand assets they've bought, like you said, sort of renovated. But that kind of has limitations. If you want to stay in Western Australia, you're going to have to evolve and do different types of deals. And, you know, I'm sure if they don't have the people, they can get top-notch people. But yeah, they are where they are for a reason.
And they'll inherit all the De Grey personnel, like the POX experts internally there that they've got for this whole process. Like, I'd assume that De Grey office will just become its own bloody Northern Star satellite office. I don't know if they're going to integrate it all together or not. It'd be fucking too big. But you would imagine that team would just be absorbed and they will continue on with a different logo on their shirt.
Yeah, they were keen to stress that. And why wouldn't you? Absolutely, Matty. So I reckon the next point is approvals. Now, this is a big one. The deal's not conditional on any approvals, but, you know, notably they've come in before the approvals, you know, be it state, water, federal, have been received. De Grey came out and said, we're expecting these to come all through in 2025, although Stu did sort of say on the call, maybe we're delayed a year, maybe we're delayed 2 years. And it's sort of notable looking at one of the charts that they put up. It's sort of, you know, titled year 1, year 2, year 3, as opposed to FY25, FY26. So it is a bit of a question mark when these kind of come through. Approvals in WA, approvals in Australia have been, you know, a huge point of conversation across the industry this year. That's not kind of changing. But, you know, Trav, when we were speaking about this morning, you kind of pointed out this maybe works in Northern Star's favour when you've got the big KCGM expansion going on. You've also got Hemi. Did your thoughts kind of evolve on that one?
No, my worry with Northern Star when I first read it was actually just like, how are they going to manage the overlapping kind of big kind of capex spend at two different projects. You know, you don't want to stretch your bandwidth too thin when you're embarking on, you know, two pretty substantial kind of, you know, capex projects. So yeah, if Hemi is delayed, like, I actually have some sense of minor relief in that, and then, you know, some more kind of comfort in the funding dynamics as well in some sense. But and that's why, like, you know, Hemi always belonged in someone else's portfolio, not De Grey's, because you want to have the balance sheet of someone who has a much more substantial diversified portfolio and funding capability and everything like that to absorb any inconsistencies that come with, you know, financing, approving, building, ramping up, commissioning, all of that sort of stuff with a big kind of complex and in this case, you know, for Australia, novel processing mine. So, you know, Northern Star are going to take that on. I don't think it'll be trivial, but I do not mind if it's delayed 1 to 2 years, just for the kind of capex case.
I suppose if you look at it simply, they got the first 800 million covered already. Like let's say I know that 1.3 billion capex they put out, I think we all thought that was pretty under. I think that was the general consensus when that came out for De Grey.
Totally.
Let's say it's 2 billion. Like, if you got nearly half of it covered already with the cash that's coming in, probably delays it a bit in a way.
Yeah. I think of it in, like, just in bandwidth sense as well. Like the companies that have all gone and become, like, you know, built great gold mining businesses over time, and they've done it by developing mines. They never develop two mines at the same time. It's always one at a time, right? Because bandwidth can be very stretched if you're embarking on two major projects at the same time. And they sort of downplay the extent to which, you know, the KCGM expansion is part of their big footprint. They say it's like 10% of their I can't remember what the words were, but, like, you know, footprint or something at the moment. But it's, for all intents and purposes, I'd be a lot more comfortable them kind of staging the two big projects. Like,
it helps when they're at other ends of the state in a way, because you're not relying on probably a lot different service providers doing each. They're sort of decoupled. They're very decoupled from each other on a geographic basis, being at other ends of the country.
Yeah.
Yeah, that's a good point. And just on the CapEx, I think the words they used were that number's a bit stale. So they're gonna run through it and they're gonna update the market once more before they make FID. Obviously, once the approvals sort of come through, and yeah, there's a few other things to look at. They spoke about the EPCM and EPC tenders that have been issued. Contract mining tenders is underway, and then your purchase power agreement is well advanced according to De Grey.
Yeah. Oh, look, it's gonna be transformational for them. This could be transformational for Saltbush Contracting too. Don't you
Got a
reckon?
new sponsor, mate.
We've got a new partner. Get you, buddy. There's pits scattered everywhere up here. Mate, you need to keep those trucks moving in your open pit. You want the diggers, just tip it into the truck and get the truck back. Pretty much what Saltbush Contracting do. If you can't be fucked taking it all the way to the mill, Saltbush do that bit.
Got to haul
They'll
it.
do it for you.
It doesn't matter if your mill's 300 k's away, bloody 5 k's away. You want to keep trucks moving. Saltbush road trains do the shit part for you that you don't want to do. Just, mate, get them up.
Mate,
And mate, I want sponsors up at Hemi.
They do it. They do it. They do it fast. They do it effectively. They do it reliably.
Right.
They don't have downtime. It's just, yeah, mate. When it comes to haulage, Saltbush.
That's it. Even though we'll get into them later, mate, those Ashburton and Molina West projects, if they take that bloody option, that's going to be a Saltbush jobby, carting all the dirt up to Hemi. Mate, it is friggin' brilliant, mate. And don't forget, mate, they'll even do the roads, the bloody earthworks to get started mine, and then they'll do the bloody tons from the mine to the mill. So they're full turnkey moving dirt. Give Lockie Jones a call. Welcome Saltbush. His number's in the show notes. Ready to move
Mate,
dirt.
that regional study that has got Saltbush's name all over it, mate.
Right,
So
well, let's get into the
talk
flow
about
sheet,
it.
JD.
So 10 million tonnes per annum, that was the DFS. But, you know, again, to quote Stu, that the plant is capable of doing 15, albeit built for 10. So people chucking out numbers, 700,000 ounces per annum, even 900. I've seen that somewhere. So a few different sort of additional scoping studies going on. Firstly, you've got the regional one that came out, I think, in June or July. They're talking about adding 140,000 ounces per annum over a 6-year period, sort of coming in between years 4 and 9. That will cost them around about $200 million in upfront CapEx. And then you've got the underground scoping study underway. So that is meant to come out in the December quarter, I believe. The Hemi underground resource now sits at 2.1 million ounces at 1.57 grams per tonne. So not what used to be an underground grade, but it's a different day and age now. So we'll see how that stacks up when they come out with the numbers.
Definitely not it wasn't an underground refractory grade either.
It certainly wasn't. And Matty, I know you've spent a bit of time looking at the Met. Northern Star sort of highlighting that they do the ultrafine grinding at KCGM, roasting at Canana Bell. So they've got a bit of experience. But looking back through the flow sheet from the DFS and sort of tuning in, what did you kind of glean?
Yeah, and as I said, a lot of this, like, they don't need to have the specific experience. Like, there's the people that are working for De Grey have got experience running POX plants, and they will come into the Northern Star family. So it's not like they have to have ran a POX plant at all. Like, you find people that have done it, which they exist. POX plants are a proven thing, and probably first start on like the whole oxide transitional fresh rock. That's what you hear. So when you talk fresh rock, that's your sulfide shit. That's your refractory stuff, the lowest. Then oxide's the open pit stuff, transitional, the problem child in between. So looking at their DFS, oxide makes up 5% of the scheduled feed tons. So it's actually not shitloads. I'm assuming it's free milling. The Met results from 2020 indicated that the Brolga oxide material was free milling with 93% recovery. So it's not a refractory oxide. I don't know if they exist. Do they exist? If refractory oxide exists, someone let me know. Transitional, the problem child, that's 13% of the feed. So 82% is fresh rock from their DFS. So effectively, 95% of the feed is considered refractory because your transition doesn't know who it identifies as sometimes. It's the bit of the problem child. So I think with their Northern Star's underground experience, and that's what they do have experience in. They are an underground gold miner predominantly. That is what they do. Brings a lot of flexibility with the resource going to the mill. Because for a POX plant to work, from my understanding, based on some good education I've been given, it's all about consistencies of the sulfide being fed into it, like the sulfur grade of the concentrate. It's not the grade of the ore, it's how much sulfide is in there that needs to be friggin' sledgehammered off by these POX trains.
Yeah. Because the sulfur, that's meaningful to the mass pool, which is meaningful to the...
Yeah, and it's like... I think you can change the mass pool based, like adding oxygen and everything. So if you pull less, you get a higher grade. If you pull shitloads of it up, you get more sulfides, but it's a lower grade. So, but the percent of sulfur going into that POX train needs to be steady for it to work, because it's like a big thermodynamic relationship between how much sulfur is in that concentrate that's getting fed into the POX train and the pressure and the temperature that POX train runs at for it to break it all up. So if there's variability, and you can't just dial up temperature and pressure quickly on a POX train, because they just need to run steady.
Consistent.
And so the sulfide feed going in needs to be steady as well. So,
when you look at the grade, the DFS plan was start with a high grade starter pit.
Yep.
Do you think that is still a feasible option? Or do you think Northern Star might be rethinking it so that they can get a decent blend of a few different deposits and ore sources, sort of be thinking about that blend and consistency from the beginning, which might mean more capital early?
Oh, and it's like a mining chemistry set in a way, like just in terms of the amount of juggling that would be here, like, because you obviously got a big, like, to build a 10 million plant, that is a big construction timeline to do that. Remember, oxide's 5% of your ore feed, so it's not going to last for ages. But do you want to be potentially developing some underground mines or underground components of it while you're building the plant? But then that comes back to what's going to be the results of these underground feasibility studies? Is it going to be cost effective or feasible, or could you make the same amount of money bulk mining this underground or doing it via an open pit later on? Because the advantage would be is that they could be mining the oxide stuff, free milling stuff, develop underground and there's going to be obviously multiple. Like I'll bring up the section here. There's multiple ore bodies. There's probably, if they do go underground, there's probably going to be multiple undergrounds. But they could very simplistically get themselves in the position, once that plant turns on, you've got your oxide feed, and then you've got bulk underground material in the fresh rock, and you leave that transition shit to later. Because if you do everything via pit, eventually, once you go from oxide, you've got to get through the transition to get to the fresh rock. I'm not sure of if I assume for a deposit this bloody big, there will be high grade components that they will be able to target. That's where your underground becomes beneficial, because you develop to the high grade. You get the high grade parts first. But open pit, you will have to go through that transition stuff eventually. And that's obviously brings a lot of, that's 13% of the ore feed. That brings a lot of challenges, from my understanding, of keeping that consistent sulfide feed sulfur grade into the POX trains. So the POX experience is one thing. Like, it's not the biggest thing, but understanding the resource and the refractory nature of each part of it, and what the sulfur content, and putting that into the mine plan, that is the most critical part of this project, is understanding what dirt is what and how you're going to mine it to keep that blend. And like the POX trains, effectively, if every other processing method fails, you use a POX plant. Like, it's just the last resort. It's proven, it works, and the reason it won't work is if there's variability in what's getting fed into it. So understanding what they're pulling out is going to be the exciting part. Geez, mate, this would be fun to work on. this would be like, this is freaking, as you said, it's the biggest price tag for a project. It's friggin' huge. The amount of options and optimizations you could do on how best to mine this based on understanding the resource. It's, yeah, mate, I'll go over the flow sheet briefly again. So and for those who don't know, because I've been wanking on about refractory is, it just doesn't leach into cyanide. It's got sulfides bloody covering it, and the cyanide can't leach the gold into solution. You've got to break up the friggin' the sulfides to get to the gold. And that's what a POX does. Just a big fucking sledgehammer. So they've got primary, secondary crusher, then high pressure grinding rolls, then into a ball mill. HPGRs, they're in place of a SAG mill. I think I got HPGR mixed up with ultra fine grinding recently. My apologies to the metallurgists out there. I just got a tune up from one. Oh, yeah, I'm really sorry. I was so embarrassed. I thought I had this sorted. So that grinded material then goes into the flotation circuit. So that floats the sulfide material out. And then when you're talking about mass pull, Trav, that's mass pull means how much of the sulfide shit are you floating out? I think their DFS said they were getting 8% mass pull. So I'll bring this chart up here, and it shows for that 10 million tonne, if you get 8% mass pull, that means you're getting 800,000 tonne of float, the overflow. And that's why they've got two 400,000 tonne POX trains, because the 8% mass pull of 10 million tonne of dirt gives you 800,000 tonne.
Gotcha.
So that overflow then goes into the POX, and then that just gets sledgehammered and comes out unsulfided effectively. The sulfides turns acidic, then they have to chuck a shitload of lime in to neutralise it, then it goes into your cyanide circuit.
Gotcha.
You've just unsulfided it.
Gotcha.
And then the underflow, the 9.2 million tonne, that is what hasn't floated.
Mm-hmm.
So you would consider that the unsulfide stuff.
Yeah. Can you do much with that? No.
Well, then that goes into the free milling. So you're only floating out, like the flotation gets the sulfides and floats it up.
Gotcha.
So the stuff remaining, oh geez, I might shoot myself in the foot here. The underflow that doesn't float is free milling because it hasn't got sulfides. Right. So it's only floating out sulfides.
Okay.
I think. I've got to stop saying I think. I've just got to lean in with confidence. So yes, overall the mining and the schedule, like it might become more of a metallurgical decision than say a grade decision. Like the schedule might be dependent on, right, what's the best blend to optimize the POX circuit so we get the best recovery. And like another interesting one, which is it's like a bit they got rid of that might come back to them, is the Ashburton project that Northern Star divested in 2020. So De Grey have actually got a option to acquire 100% of that Ashburton project from Kalamazoo, which expires in Feb 2025. So Kalamazoo is actually was the other party with Karora that was Cali Metals. Mm-hmm. That's that Kalamazoo. So it's pretty far away. It's about bloody 500 k's away. I think there's 1 and a bit million ounces there, but it's a refractory project that is apparently very high in sulfides. So it'll have a really high sulfide content in a concentrate. So like, not saying they would do this, but if they do, I'll look like a legend. They could mine that, concentrate it, truck the concentrate up to Hemi, and there's like that could give like chuck it in a tank, and if they need extra sulfides to balance out the feed going into the POX, you can add a bit of that shit in to regulate that POX, yeah. And then like mine, I think to control it so it's not like going from like the flotation straight into the POX. So if you get a spike in sulfides, you're like, fuck, we've got to change the POX, because you can't. You chuck it in this big tank and let it mix slowly, so your sulfide grade goes up and down very slowly, which gives you time to then change the settings of the POX for a higher or lower sulfur content. Because it's not like I would find it hard to believe they just maintain 8% the whole time. That would be just too simple. So that's they're the options. So whether they take up that option to, I think they got to pay 30 mil, could be in shares or cash, 15 mil by Feb, and then 15 mil 18 months later. Whether that becomes an option, I don't know. Mate, have a look at this. This is getting out there. Remember I said this could be part of a big bloody mega merger with a major with yada yada. Mate, Kalamazoo have got all the ground around Fosterville. This could be just a play to get Kalamazoo and Agnico Eagle take them out. The mega merger. You never know. Probably not.
Love it, Matty.
But
Love it.
is that where they're headed, do you think? They're trying, they're not they've gone from the Paulson's days, select like underground mining, good cash flow. They've revamped these other underground mines, a couple 100,000 ounce ones. Now they've got the super pit and they've got this big 500,000 ounce minimum project. Are they now transforming themselves into, well, they're going to be 25 billion pro forma,
Sure.
like a new major that targets big deposits.
As you get bigger, you want to get longer life and lower cost assets. This is once it's all built and everything, might be a lower cost asset than they've got. They point that out on the cost curve, but is it a longer life asset than they've currently got? I don't think you can say that necessarily. Do they become more or less attractive to? I think history is proven with gold miners, when you get to a certain scale, like doing deals becomes value destructive rather than value creative, because the sweet spot is somewhere like where you don't have so many layers of management that things kind of are too bureaucratic and all that sort of stuff. There's a maximum upper bound to the number of mines you want to commit your bandwidth to. I don't know if I actually think the relative value proposition is a lot more in favor of if any large kind of mega miners out there wanting to just add scale. I don't think the value equation is in line with the Australian miners at the moment. I actually think the North American listed miners are far cheaper on relative multiples.
Yeah. And I think if you're going to pick one company that wouldn't become a bureaucratic organisation, the bigger it gets, I'd pick Northern Star to be that.
Maybe. I mean, like, why did Bill and Rel leave? It's just things get too big. It's not as fun. Like,
It's inevitable, right? Like you just got to keep fighting it if you're a big company. Yeah, every single founder of a company will say that, and it's kind of your job just to keep chopping it down. But it's an interesting point on where do they look and how do they compare things with their portfolio of assets. So KCGM is the standout, and particularly when you're talking about mine life there, Trav, like that thing just goes on and on and on and on, and everyone knows that. And it's really interesting to compare what the rate of return from putting excess cash into, investing more into KCGM and just hammering down the all-in sustaining costs and the operating costs there, what that can kind of return. But I think Stu kind of spoke to this. We were intrigued about it. We spoke about it this morning, and the sense I kind of got is that they can't really put any extra dollars into KCGM right now. They just need to get that new mill. That's going to take a bit of time, but they've invested the money, or the money's been pigeonholed to be spent in the coming years, and extra dollars isn't going to help that. So I'll play a little snippet and people can kind of interpret for themselves, and then we can have a chat about it.
Yeah, thanks, Stu and Glenn, and I appreciate the additional colour. I mean, I guess the question wasn't really around what gold price was used to justify the acquisition or what you need to get Hemi to stack up. It was more around your existing portfolio, Stu, and what the risk-adjusted returns of investing within that portfolio are, compared to an external acquisition, which is no doubt high risk and has a longer period to pay back. But that's fine. I understand that, and I guess the comparison is more to your sort of reserve base at $2,000 Aussie an ounce and resource base at $2,500 an ounce. But all good, thanks.
Yeah, thanks, man. And look, we're in those assessments anyway. Things like Bimiston. As soon as we get that lower cost mill in and the opportunities on those extensions around Kalgoorlie, that's really where those things come in. But we're all in double-digit IRRs, and they just look better at better gold prices. So I guess we're continuing to advance those at the rate we can.
So that's kind of it. Like, and he spoke to it in other responses as well. But they're going all out at growth, and they're doing that kind of everywhere they can. Is the impression that they were given the market.
But do you remember, JD,
right.
when they pulled the trigger on the Fimiston mill expansion? It was a different outcome to what had been kind of guided as options sort of 12 months beforehand. I think they put two options to the market like 12 months before they announced it, and they went with neither. It was sort of this in-between one, right? So they always could have chosen
24
a more
versus 29.
Yeah, a more thorough, like
27.
a bigger, fresher, newer, more productive mill, but they opted for the in-between jobby. So yeah, like I do think it's the right question to ask. What was the equation? To do things differently at Fimiston versus this. Yeah.
100%. And you're always going to be asking it internally anyway. Like you're not going to choose to go out and pay a premium and do M&A if you think you've got a really good option internally, right? You look at investing in their assets you got, and then, you look at dividends or buybacks or whatever, and then you look at other M&A and just sort of stack up the returns that you can kind of get from each. And yeah, it's kind of clear to me that they did that, and, on their analysis, this is the one that's going to give them the best sort of returns over the long run. So, I mean, their work's kind of cut out for them now, but yeah, very, very interesting to see how they've gone about it and approached M&A.
God, would you take 500,000 ounces pieced together from 3 operations, non-refractory, or you go for this one, refractory, big scale?
Economies of scale, mining and economies of scale just go hand in hand. And refractory or not, it's, what cash can you get out the door? And if they have the confidence from the team and the people they've spoken with, then, chances are you probably, every kind of refractory is different. It's not black and white, but economies of scale, 1 operations over 3 most times does the job, kind of, keeping all the other sort of things in line with one another.
Yeah. 1 or 3. I'd frame it differently. I actually think like every capital allocation decision is only like, what's your next best alternative? And in this case, I think do Australian gold miners have a license to operate in North America anymore? It's in question, in doubt, but Pogo's looking okay now. Maybe Northern Star could have persuaded the market that's the case. I think there's no doubt there's undeveloped projects in North America that on like a PNAV basis screen far cheaper than the ones in Australia.
But I think about, they've got Pogo's going good now, but it took so long to get there, and I'd argue
that was an existing mine though, right? Like there's undeveloped, like we talked about Snowline, their Ridge project in the past. We're talking like 3 gram open pit, like big beefy project. Market cap's only $800 million, and you're talking nearly 300,000 ounces a year that thing could do. So
and
there's been challenges in the Yukon though, right?
100%.
Permitting. This is like, a WA first, stance.
100%. I mean, mind you though, you're still waiting for an unknown timeline on permits here too, and you've got labour that's competing with iron ore. Like it's not straightforward, I don't think, but yeah.
Yeah,
I think with the undeveloped North American ones, like as you said, it was an existing mine, Pogo. So you've got some people that know how to mine already. That you have to change some of their ways to mine the way you want to mine. But I suppose the challenge with undeveloped project over there, you've got to then recruit a lot of people that might not have ever mined at all. So which could be another problem, unless like to send a full expat workforce over there and try and then recruit over there, because you still have to employ it. I don't think there's an easy way to get North American going. I'm sure they've. When you do, let me know.
Everything's got a price. Like everything's got a price, and at some point, your margin of safety to choose, one thing over another is different. And the fact everything's got a price, I actually kind of think is why De Grey's sold now too. Like it's underperformed, sort of. Other gold names, sort of, year to date, it's still up year to date. But yeah, for a long time, it was kind of flat and went up a little bit. So that relative underperformance has probably led to it looking attractive to Northern Star. Yeah,
well, it's probably at the share price it should have been at now. Like it's at an all-time high today. So,
yeah, 100%, mate. We've spoken this whole conversation from Northern Star's perspective, but let's sort of spin that a bit and put ourselves in a De Grey's, in Ali's shoes, if you're a De Grey sort of shareholder, and how you're kind of thinking about it, because it's a great result, right? But if you look back at the 5-year history of the share price, on Friday, pre this announcement, they were at a similar level to what they were back in September 2020, when there was that sort of discovery kind of run up. And then you look at the valuations that brokers have kind of put to this, and this bid, I saw one broker sort of said it implies a 16% premium to the median broker NAV, which is kind of interesting. Obviously, Stu Tonkin, very eager to point out what we've spoken about in the past, that if you flush through current gold prices, it looks a fair bit different. But yeah, I mean, the the highest point De Grey's traded in the last 5 years was the mid 160s, and now it's just under $2. So I think it's a really good result for those shareholders, versus the alternative of just waiting and waiting, constructing the thing. Bar gold price going absolutely crazy, they could have been in that sort of part of the Lassonde curve for quite some time to come.
Awesome outcome for De Grey shareholders, in my opinion.
Oh, mate, where do I sign if I was one?
Awesome. It's awesome. It's, kudos to De Grey for getting the outcome. What a great ending for De Grey shareholders, assuming, everything's honky dory from here, and it's just a time thing. Like, this is
50x'd it.
It's exactly what you wanted, In their opinion, it's a tier one deposit. A tier one deposit belongs in someone else's hands. That's just the way the world works in mining. You don't want to take the risk of building it yourself, and then because of the dynamics with funding and what could happen with dilution if you come across an obstacle, which inevitably happens in hard things. Whereas a major with diversified portfolio have the balance sheet to have that not impact you. You can still get Northern, if you bullish the project long term as well. You can ride your Northern Star shareholding and see the upside of that too. So I just think it's a wicked outcome.
And it's effectively cash because you're getting scrip in a fucking highly liquid stock. So you could bloody dump it straight away if you want. So it's the same as getting cash.
Yeah. But I did want to make a point just on the valuation as well, right? Like if you think of it from the Northern Star perspective again, not the De Grey perspective, no doubt the deal makes sense on a spreadsheet. Like this, I'm sure the spreadsheet works. I'm sure, right? But we all know the real world doesn't eventuate like the spreadsheet. So you need to make sure you've got a lot of margin for error when you're buying something that could have error. And how much margin for error do we think there is in Northern Star's $5 billion price tag, right? At spot prices, like Stu says, sure. At consensus, not so sure. So they're paying like 16% above median NAV from the brokers. That's unrisked NAV JDs. So the brokers aren't kind of risking the cash flows, which sometimes you do for a development asset, but they're plugging in the house gold decks, which taper lower, and could be lagging. Is Northern Star getting a bargain here? I don't think so. And you can see what the market thinks of it, right? Like Northern Star's down 7% today. It's down a fair bit more than the other gold producers. So GDX is off too, but look at the heat map, right? So the initial reaction from the Northern Star shareholders is there in that picture. You can see it. For the Grey shareholders, great outcome, totally. It's just an awesome outcome. But I think the other point to make on the valuation is just the mine life thing too, right? Like I understand you pay a premium price for premium assets. Like that's the thing people always point to is, if you want a tier one asset, you got to pay up for it. You're not going to get them on the cheap. And De Grey's never had to convince us that its production profile is tier one quality. Like it's always been a 500,000 ounce plus per annum, production profile for as long as it's been talked about how much it can produce. But the merit of paying a premium price for premium assets often comes down to the fact that you're getting a very long life project, and it's that long life that gives you optionality for the big commodity kind of upswings that happen over that long life and
multiple cycles. Yeah,
totally. I think that's where there's still a question mark with De Grey, like the DFS 12 years mine life. The ore bodies extend at depth, but we start talking about these like 1-ish gram per ton sort of underground mines which are refractory. Like, is that are you gonna keep doing that sort of after 12 years time? Maybe that's the economics works for that to be the case and all that sort of stuff. But yeah, and there's those regional deposits that you talked about, Matty. They've always been there. Then but it's not clear to me that Hemi will be a producing mine in 20 years time. That's an unknown to me. It's not like you buy the super pit, that's going to be produced in 30 years from now. It's not as clear to me that Hemi is still producing in 20 years. That's it's just a question mark.
Yeah, who knows?
Yeah,
who knows? You'd I assume once they drill the live and fuck out of it underground. I'd be interested to see what type of method they'll use underground. Like if it's as bulk as it is, like probably speaking out my arse here, like is it amenable to caving and stuff like that for like proper bulk tons? Not sure.
Yeah.
But it's one of those things. Gold mines continue to keep going. So, but as you said, you don't know yet. But, geez, you'd put your
but that's the thing. You don't know. But often when you pay up, you do know, right? Yeah. So Philo, you do know that that's going to be a producing mine for 30 years. Yeah, Super Pit, you do know the reserves are 40 years or whatever they are. This you don't know, so you've got to you're paying up, but there's still uncertainty. So that's why Northern Star have to deliver. That's why I think they're off 7% today because they've paid up. Now they've got to execute to prove to the market that this is what they think it can be.
Yeah.
Yeah. Matty, you raised the sort of question of interlopers, or you sort of mentioned the point on Agnico before. You got any high hopes of somebody coming in, mate?
Nah, not this stage.
Nah,
Wouldn't think so. Why would you?
It's a big tag. The one thing I'll point out is just something we mentioned, I think, in the director special a week ago, Barrick and how they look at tier 1. 5 million ounces, 10-year mine life at 500,000 ounce per annum, lower half of the cost curve, 15% return on investment, located in a world-class geological district with potential for organic reserve growth. So checks a few of them, but I'd be quite surprised if somebody came in over the top here.
Yeah, and what's the last, besides Newmont taken back over Newcrest, what's the last major that's come into Australia for gold?
Agnico buying...
and Agnico Fosterville was... Yeah,
but it was Kirkland Lakes.
and that was, Kirkland already. I don't know, I just can't... You just look at all the divestment that's happened by these majors in Australia. It's like, are they going to reinvest? Don't know. Just can't see it happening.
I do agree with you, although I think the lens at which they look at more of that divestment is more sort of subscale assets as opposed to, not wanting to operate in Australia. Like, Australia and WA in particular is just a top-notch jurisdiction when you compare it to anywhere, but obviously that comes with a price tag.
Yeah, I might look stupid when someone does, but nah, I can't. Don't know. Wouldn't you think? What do you think would be more likely to happen? A major interloping on this individually, or as I said, doing a later future merger with someone like a Northern Star to beef it out that way?
I think. Yeah, I don't think an interloper comes in sort of done. Like, look at the price today. It's not pricing in an uplift or anything like that. It's
the biggest ever.
Yeah, sorry, I mean the grade share price. So
that's what I mean. Like it's not. It's already big.
Yeah, but it's you look at the merger ratio with Northern Star. They basically back out. There's no. It's not. It's like there's a small spread there and everything. But sometimes when the market is expecting an interloper, it'll kind of trade above the implied.
Yeah,
it's not doing that.
Yeah.
The market's not.
Where is it trading on that ratio at the moment?
There's a bit of a spread there. There's a bit of a spread, but it's not much. Yeah.
So I mean, all up a super sort of fascinating deal, and with big companies that Northern Star now is, like, this is undoubtedly a big company. The management teams really put their name to a deal, and this is this is the biggest decision that they will make, maybe in their sort of tenure. So they really kind of put their name to it. So of course they would have done the work, and now they just kind of need to execute, right?
And as I said, they must have a freaking good understanding of what that resource is to do this deal. Like, I know, as you said, there's like questions on the life of it, but in terms of what's there at the moment, to take a bite like this, to go for a refractory deposit, they must have a freaking good understanding of what that dirt is and how they're going to attack it. You wouldn't be thinking about that after the fact. Yeah. So I'd say there was some extensive DD being done on this for a long time.
You reckon they put in any of their own holes to match them up?
What, drill holes?
Yeah.
Just double them.
Twin any holes and just make sure it all lined up.
Yeah. Like a bloody... Oh, God, I won't say that. Thinking old Mike de Guzman there.
Well, I mean, the one little detail we didn't speak about, but it was mentioned right at the end of the call that, Northern Star approached De Grey. They weren't running a sale process. And
I don't know. They've had a data room for ages.
People would have looked.
Everyone's looked. And for a deal not to be done yet, I don't think you can. Yeah, like there was a you know, the scheme docs reference a data room. Maybe they didn't run an official sale process, but you know, for all intents and purposes, I think you extract maximum value. Any good advisor will do that. So you don't just accept the only deal that you think you can get. You know, you try and canvass others, and if there's nothing else, then you know you go for it. So,
I guess what I'm getting at is I don't think there was any serious competition.
yeah.
But wouldn't there been for the last 2 or 3 years an unofficial sales process going on? Like they would have been amenable to a deal at any point at the right price, wouldn't they?
Just an open data room.
Yeah, I think so. And especially with the financing process as well. Like they were, you know, approaching a deadline to announce what their project finance thing is. So you will see in Northern Star's kind of scheme docs, they're like saying, you know, you can't execute any of your project finance stuff, which included, by the way, a royalty standby facility too. Don't execute any of that without our consent. So I think Northern Star's basically like you come to the crossroad where you're either go it alone or you get acquired, and they got as close as they possibly could to that point where you make that decision and potentially, you know, mortgage the bloody with a royalty, which makes it less likely to be acquired. And they did the right thing and they sold to Northern Star.
Yeah.
They would have said, "There's no bloody way we're taking you out if you sign a freaking royalty."
What do we think about Northern Star's, I think you've got it written here, portfolio rationalisation? This is the first thing that I thought of.
What do you think, Matt?
Just thinking they were, and the common theme was they're wedded to previously from this 2 million ounces per annum by FY 29, I think it was, or 28 or 29. Like that was their target. They want to become a 2 million ounce producer. Now they've got this. They're saying, look, we pro forma will by 29 produce 2.5. But I think now with this, they've got the ability to now potentially offload some of the portfolio and still hit their 2 million ounces. I don't think they're wedded to 2.5 now because of this deal. They are said they're going to do 2 million. I think this has opened up the option to potentially unload things without getting crucified.
Yeah, it would take a minute. I think, you know, net Ramelius will be happier than they were a couple of days ago.
Yeah,
it's like a greater likelihood, but it'll take a bit of time. I think you're right. You know, you start to look at it a little bit more now that this has kind of happened, but we'll see when that sort of eventuates.
The conversation with Jake Klein is sort of fresh in my head a bit. And I really like the way he thinks about the portfolio and all that sort of stuff. It's not about having 2 million ounces for the sake of 2 million ounces. It's about, you know, improving the portfolio over time. So when the market's good, sort of sell your lower life, higher cost assets off and hopefully, you know, recycle that capital and use it to help you buy lower cost, longer life assets. So I don't love having these arbitrary targets of like a quantity production metric, because maybe it encourages you to hold on to some of your higher cost mines that might make the collective portfolio a bit higher cost and not the best use of free cash flow, and you've got to put in a lot of capex to keep them and all that sort of stuff. So yeah,
and I think it's one of those. We're talking about Carosue Dam. What was it? 2,300 all in sustaining cost. I think I'm not sure of the capital allocation required in the future, but. 2,300 all in sustaining cost
money.
Is it? It's making money. But you'd think what would you think of the play if they've acquired this for all-scrip, but then divest some assets for cash at higher prices?
Yeah,
and that's like a bit of you sort of end up still at that 2 million ounce spot, but you've used your scrip, but you've got a heap of cash in the door plus the 800 from De Grey, and you've sort of funded the capex for that potentially, and you've maybe made your life a bit simpler. Don't know how that'd all work in tandem.
I think if they were planning to sell Carosue Dam, they may have tried to debt fund a bit more of this, knowing that the cash would then come in the door from the sale a bit further, and then you dilute less net. But it's an all-scrip deal, so I don't think their intention would be to divest Carosue just yet. But like you say, if they did look at the rationalisation there, that's a big deal for Ramelius, you know.
Yeah. Do you think they'd ever get rid of Pogo if someone paid for it?
Probably. Like, everything's got a price.
Yeah, because like, wouldn't you think that'd like imagine selling it? And like, geez, you'd think it'd simplify the business a lot. I know a lot of work's gone into it, but like, if someone offered Daishsat a decent chunk, and it's a 200,000 ounce mine or something.
It's one of their better assets now too. Like just from the cash flow that's delivering. relative to its the ounce production. That's a really good asset for them at the moment.
Yeah. As you said, it's all got a price.
Yeah.
I think I'm all out, guys. I reckon we.
What else would they sell? KB South Cal. It's going to be interesting what they do with them.
Yeah, you said that they would probably sell some of their infrastructure after the Fimiston super pit expansion mill is done. I've got a question, maybe two questions for you guys. Do you think in 3 years' time will Northern Star's share price outperform or underperform its peer group?
3 years' time?
Yeah.
Take the short side on that. Just development on two big projects versus the peer group it's tough, right?
Yeah.
Uh-huh.
It depends on how good they sell the growth story, because like this is really kicking the can down the road for when free cash flow comes in even further, because they're already a growth story for the capex spend needed for KCGM. Then they're adding more unless they divest some assets and bring some cash in the door to offset it. But it's really potentially putting Evolution ahead of them for the large cap that you can expect some free cash returns from. But it depends on what they do with their existing portfolio, I guess. I think it's going to be down.
Yeah.
In saying that quickly, you're fighting massively against passive flows. Northern Star will suck up the majority of them for anyone looking to allocate in Australia. So if gold gets more attention, they're just going to be winning more and more dollars. And yeah, that's just one thing you're fighting against when you're betting against the biggest name in the space.
Well, and one more for you. And I agree with both your points there. In 10 years' time, is any of the acquisition value here written down?
Oh, geez, I don't know. I would love to be in the weeds about geological confidence on it, which I'm not.
Mm-hmm.
It's the resource is like, right, is this resource at that scale going to perform in line?
Yeah.
That you're also, yeah.
That's where it all starts from. It's what is going to be with a low grade resource. If it's 1.3 instead of 1.5,
it's a big deal.
That's fucking huge. So is there upside to it?
JD.
There's also plenty of fiscal stupidity from governments going around. So that's a huge tailwind against, if you're looking at the asset of the value. If gold just goes up over that period, I'm betting big against gold to say in 10 years' time. So, it'll be tough, but maybe I'll say no and give Northern Star the benefit of the doubt.
Surely, like, how do you look at this, like, from the permitting side of things and approvals, like, far out? Like, this is now one of the biggest development projects to go on in the country. I don't know, probably not the scale of iron ore, I wouldn't imagine, but in the metalliferous space, this is now the biggest development project in the country.
Yeah.
Like, fuck me, wouldn't you really, throw the kitchen sink at it to help them get it going to be the best for the state? Like,
this is going to happen 100%. There's no doubt about
but
it.
like how, but time-wise, like, they could fucking drag it out for years to give approvals, or they could get behind them and right, what do you need us to do? We need this, and just get it happening. Then that's at the expense of the smaller development ones that are already in line.
I think we should do a whole episode on how approval timelines are blown out and how disastrous that is.
I'll go get a bloody, you know what they need. I'll play a snippet.
When we asked Reebok to send us Terry Tate, some people thought we were crazy. But I'm a firm believer in paradigm breaking, outside the box thinking.
Hey, buddy.
Break was over 15 minutes ago, Mitch!
And since Terry's been with us, our productivity has gone up 46%. We're getting more from our employees than ever before.
You know you need a cover balance sheet on your TPS reports, Richard. That ain't new, baby.
They need Terry Tate in there. Bloody, that was a Super Bowl lad from back in the day, just going around, just jamming people in the government office to get these bloody approvals going. We need Terry Tate in the department.
Take a peek at what Millet's doing in Argentina. That's some interesting stuff. Very different way of going about it. So, yeah, I mean, never worked inside a government organisation, Matty, and I've got absolutely no intention of, but I don't really know what happens.
You'd go good in there, JD. I could see you really fitting in. You'd love their intensity.
Just thriving, mate.
Geez,
Thriving.
you'd catch up on your podcast, but.
Oh, I'd read a lot. maybe it wouldn't be so bad after all, mate.
Probably shouldn't hang shit on them since we're asking them to do more, but fuck, can you can someone from these government entities get in touch and tell us if we're complete, like why they're stretched out? Like, are we missing some key piece of information that we're not taking into consideration? Like, hey, we're all ears.
Let's get the Minister of Mines or someone like that on.
Yeah, what are you doing, mate? Oh. Anyway, fuck
Alrighty.
me, an hour
what
on
do we
one.
cap it there?
An hour long segment.
It's a big deal, mate. Big deal.
Holy snap and duck shit. Right. I want to see all the following names up at Hemi, ASAP, Mineral Mining Services, and Saltbush. They're a given. Oh, Paul Natoli will be licking his lips. A grounded camp up at Hemi. That is on the way. If we go underground, there's going to be Sandvik bolts everywhere. Dave Harrison, Adam Batista, Steve Tarr should have been called by now for CRE insurance. Hope they're involved in the process. Any more drilling up there? Nah, there'd have to be more gold up there. K-Drill will go up there for sure. Bloody Daishsat. They probably founded it originally.
I reckon they did.
Yeah.
Yep.
Righto.
Hooroo.
Hooroo,
See you all
Money Miners.
tomorrow, Money Miners.
Oh, yeah. Look forward to having a beer with you.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.